So, hello everybody. Here we go for another one of these Substack videos. Hope everybody's having a great day. And again, as always, no trade calls, no recommendations, or responsible for their own stuff. We're here for educational purpose only. So, I've been posting this Russell chart across a number of platforms, and I've had quite a few questions to elaborate. And at first, I was going to write a proper note on this, on the structural deterioration at multi-year highs, but then I thought, let's just do a video. It's more digestible. It's better than putting out a 1,000 word piece, right? So here, Russell is at a critical juncture, trapped between fading momentum and structural support. So the failed breakout and deteriorating technicals, negative fund flows, and all these things really suggest that the path of least resistance here is at best for sideways action, but most probably for a little bit more of a pullback. But again, it is holding a bullish structure, and typically November and December bring in very decent strength. It's one of the best edges, really, if you like to look at seasonals for Russell in November and then December. So the key question is this broader risk sentiment we're seeing across the board going to hold through NVIDIA earnings, which is really the only thing that matters on Wednesday? And if so, is seasonal strength going to come through for Russell once again? So here, looking at the chart, making it as easy as possible, right? So we've got repeated failures at these 2021 highs, right? Market unable to really attract and sustain and hold new buyers above these highs. Essentially, once we made those highs, and even before, if you go all the way back to beginning of 2021, we're kind of stuck in this broader range here with this 175, 165 capping to the downside. And we really haven't gone anywhere, right? And every time we try to break out, bam, bam, we consolidate a little bit above, and now it's starting to look like a false breakout. So right now, we're in a situation where if the bulls can't hold this, and you can see this week, ES and NASDAQ, those 50 days got stick saved again. Russell is a little bit heavier. It's holding the 100-day moving average here. And this is really going to be key, right? So how to look at this, I think the jury's still out how we trade on both sides of this 100-day moving average, because you could easily see a situation where we rally off this and then continue much higher. But also equally, we could rally, continue to make a series of lower highs, and continue to move lower, right? Equally, if we break the 100-day moving average to the downside, we're coming into the 2025 open. You've got a lot of structural support there. So I think this whole range, for it to be a cop-out, it's very difficult. It's very tradable. But if you're trying to look at the bigger picture, you probably won't know much, right? What we'll know is that if we get a sustained break and hold above these 2021 November highs, taking out the 2025 highs, and for me, that means a weekly close above the 2025 highs, then that opens up that year-end melt up, those November, December seasonal coming in, and the primary target to the upside would be up into 270, so 271.84. Now, following that, if things go really crazier into next year, then extension targets would be 290s, 300. That's it. So above here, everything decisively turns green. Seasonals kick in. We potentially, if everything melts up, you get FOMO scenario across the board. That's what you'd want to see. Equally, if we start moving down, as I said, despite the fact that it doesn't look like there's much holding it back from an unwind to the 2025 open, there's an awful lot of structural support inside this sideways range we were highlighting, right? Because coming back in, you've got that psychological 2025 open, and below you have a lot of fib references from this move A to B back into this whole area, which if this is going to hold, you'd expect it to extend higher. Now, I'm not a huge fan of using the fibs here because I prefer fibs as pure continuation patterns, and I read this more as a failed break, and I'd prefer to trade it as a range trade. Again, that's a different, there's not the place to do it, but it's a different discussion. But I just wanted to put those levels up because a lot of people are going to be referencing them. So my base case to keep this extremely easy is that if we come back into that 2025 open, you should start seeing bulls supporting. And inside this area, it's an amber zone. It's flashing amber. It's completely neutral. It's back pretty much at the mid-range of this range. It's the 50 back retracement, and it's going to be very, very hard to have a view unless we break out of the neutral range. And breaking back down, then that puts us squarely in failed break to the upside. It's just a range trade. What are you looking for? You're looking for longs with tight asymmetry at the lows to go back into the high of the range, and you're looking for shorts with tight asymmetry at the top range for a move back into the bottom end of the range. And until you get proper confirmation for a range breakout, you're just playing the range. If we enter the amber zone and then we see buyers coming in, then your base case assumption has to be that we're going right back into those highs. But still remember, it's inside this range. That's the tricky part. So it's not a very clear pattern. I think I've seen a lot of people debating this being extremely bullish or extremely bearish for a number of reasons, whether they're technical, macro, or seasonals. And my point is it's important to understand the bear case. It's important to understand the bull case. But essentially, the way I'm reading the technicals here is that we're still inside this range. So for me, it's a range trade unless we get proper confirmation. And again, there's plenty of ways to make money and plenty of ways to lose money inside the range, but it's a range trade. Again, the key levels I would focus on are all in that amber zone. And as always, in any range, all the asymmetry is at the top and at the bottom of the range. The middle of the range can be very, very choppy. Okay. Hope that was useful. Wishing everybody an awesome week ahead. All the best. Take care, guys. Bye-bye.